All right, so this is the 1 hour chart, and all right, so this is the 1 hour chart, and and so I found a higher time frame order block. I don't know what's going on with the screen. Wow. Okay, so I found a higher time frame order block. Hold on, quick. Stop sharing. This is acting up. All right, you see my screen?
It's loading. Yes, got it.
All right, so we had an order block right here, which already has been dismantled. So we got this is the order block. I think I had you mark up last week as well. This one right here. That's why I de-shaded it to lowercase green.
And remind me again, it's the order block. Why do we mark that price point as the order block? It was because it was
It's the
higher
zone.
low the previous.
It's the lowest down closed candle, open price to the top of the wick. So this is the weekly order block. Let me make sure. Let me double click on it because I label all the lines on here so we can know what's going on. So this is a bullish order block zone weekly. Yeah. So it's basically the open, the high, the open, which is right here, and then this is the high, and then this is the middle, which is consequent encroachment. So price this is the open price. So what I did was I went ahead and marked up the mean threshold. That's something I probably didn't tell you about. But the mean threshold is another area on the order block that's sensitive. So what I mean is mean threshold is 50% of the body of the order block. So for instance, like this candle right here.
Oh, that's not consequent encroachment.
No, it's different. It is, but it's different. For order blocks, he call it. I know it's the same thing, but I just like to think the same way he thinks. So I literally just say it the way he say it. So like, let's say if this is an order block right here, which it is, then mean threshold would be 50% of the body. So it's not that's what I'm saying. There's a lot of rules to this stuff. That's why a lot of people don't want to do it, which I understand. So this is an order block right here. The mean threshold is the body right here. It's 50% of the body. So that area is sensitive as well. So if you imagine that green shaded area that I de-shaded green because the order block has already been, it went past the opening price. So this order block is still valid right here on the weekly chart. So the next area that we got to see if price is going to respect is the mean threshold, which is this green line right here. This is 50% of the body of this order block right here on the weekly chart. So also we have another order block on the weekly chart, which is right here. This is a lower down closed candle, and I can show you on the weekly chart. This is another bullish order block as well. So we have a confluence right here. We got a mean threshold with a high of an order block. So price could come down here. I see it coming down here and then reversing up. It still may come back down on Friday and then go back into the range. But the reason I say I think it may go up is because of this right here. This, like I said, this shit right here, I kind of came up with on my own. I didn't see nobody on a video or anything talk about this now. And if I start to see this really work, I'm probably just gonna keep it to myself. But basically, I'm still experimenting with it. But because ICT said you always want to keep something to yourself. So look right here. So right now,
Does it get spoiled if too many people know about it?
no, it don't. And that's what ICT talk about. Don't think like that at all because we are so small. Like we're retail traders. We're literally like 2% of the market, maybe 3%. Like we're really, really, really small. Like it's billionaire hedge fund, damn near trillionaire funds that's playing this game that that people are really worried about. They're not worried about a retail trader. Even if he make $10 million a year, he's still nothing compared to these hedge funds. It's like $500 billion. They out here, you know, like the market is trying to get those people. Like they really don't care about even a trader making 50 million a year. They're nothing. They're like a speck on a speck on a large sheet of paper. Like so. So the reason I say I think price is going to go higher is because I look at the daily opening prices. This is something that I kind of saw on my own. Like, okay, so right now price is below the monthly opening price, which we can't see the line. It's a pink line. And so if price is below the monthly opening price, that means that the bias is bearish. So here's the opening price right here on the day that I had you mark up. So if the price is bearish, then price should not be closing above the opening price of the day. So here's the daily opening price, and price closed above the week right here. This is kind of like a bullish sign sometimes. Like it closed above the weekly opening price one time, it went down, and then it closed above the weekly opening price again, then it went down, and then it closed above. This is a sign that it wants to go higher, even though it's going lower temporarily. So,
hey, are you recording this?
Yeah, I'm recording.
Good.
So look right here as well. So remember, this is a strong sign right here. Remember, price right now is below the monthly opening price, which you don't see. It's a pink line up here I have somewhere. Yeah, right there. That's the monthly opening price, that pink line right there. So we are below the monthly opening price and we're below the weekly opening price. No, price should not be closing above the daily opening price like this. So look at this. It closed above this daily opening price one time, then it went below the daily opening price, then it closed above again, and then it went below, and then it closed strongly above right there 3 times. So usually when this happens, price will either it'll come up here and take out this high and then go lower. Because this basically, I'm seeing signs that it wants to go higher because price not supposed to be closing multiple times above like this, especially if it's below the weekly opening price. And it's below the monthly opening price. Like it's bearish. The bias is bearish right now because it's below the monthly opening price and below the weekly opening price. This ICT, this is concepts, which really helped me out. It helps you. It gives you sentiment. So, but we got an order block down here. I see price coming down now. Now here's another thing you got to notice. You're gonna have to start marking up ES or S&P 500. You're gonna have to start marking those charts up too. Now check this out. Let me see. What do we have right here? I think I may have to pull up S&P 500 because I want to show you something because you're going to have to start marking up the other charts as well. Now, look, we got a breaker down here. See, this is why I think price is probably going to go lower and then reverse. Because remember, when price is in this blue box right here, day 12, 13, and 14, it usually reverses, even if it's temporary. Because remember, this makes sense that it probably would come down here and then reverse inside of this range, this blue box, and then it could come back up here to what? This bearish order block and still go lower. Sometimes when you see right here, it didn't do it. Right here, this is day 12, 13, 14. It just kept going higher. So what I noticed is that if day 15 takes day 14's high, it's going to keep going higher. So like right here, this is day 14. This is day 15. It didn't take the high, but day 16, it took it. And then it just kept going all the way kind of to the rest of the month. So because I studied this stuff, this pattern stuff that I done came up with kind of like a mad person. Because I just need to know. So right here, we have a bullish order. We have a bullish breaker on a daily right here. Let me double click to make sure. So we have a bullish breaker. So what this is the breaker. Price, it's like a magnet. It's going to bring price down to it. And then once it hit the breaker usually wants to send price higher. So we got a little confluence going on down here. We have a bullish breaker, which it wants to push price back up. We also have right here, this is a bullish order block wick high right here on the monthly chart. This is the lowest down close candle wick high. So this is the wick high. So usually price will reverse off of the wick high. So it's kind of like a confluence going on down here where it seemed like price would keep coming down to reverse. And this kind of makes sense because price is inside of the blue box right now. So it would make sense that it would probably keep coming down to what? Hit the bullish order block or hit this monthly bullish order block wick high and then reverse higher. even if it's just temporary, because it may come up here to this order block here. This is the highest up close candle, remember. Well, it's not the highest up close candle, but it is a higher, because the highest up close candle is here. Let me turn off the annotations. The highest up close candle is here. Remember, this is one consecutive order block. This is how ICT teach it. Because remember, this is a daily chart, right? But if we went to the 3-day chart, you would see one candle, right? You see that?
Yeah.
This is a daily chart. But if I went to the 3-day chart, because this would be one candle. So this is one consecutive order block up right here. So price may want to come back up here before it goes lower, or it may want to come back up to this order block here and come back up to the opening price, which, because this is a confluence. It matches with this opening price. And here's a low right here of it. This is an order block still, even though it may not be as powerful as this one, because it's always going to respect the highest up close one, which is this one here. So it makes sense that price will probably come down here. And this is the reversal zone, the blue zone. So it makes sense that it probably would come down here, reverse, come up here, hit one of these order blocks, and then go lower. It could do that, but I would have to see. This is narrative. This is something that I'm trying to learn from ICT, because if you understand narrative is more important than this market structure stuff I'm talking about, like bearish breakers and order blocks. Now, also, we have another breaker down here. We have a bullish. All right, quick. We have so we have a bullish break on the daily again. So we got two bullish breakers. So yeah, I see price coming down here. Now let me show you why also I see price coming down. You got to have multiple confluence. Now I'm about to go to a totally different chart. I'm about to go to S&P 500, and I'm about to show you what I see on there. S&P 500 and US30, which is what I'm trying to show you how to trade. They both move similar. They move about 95% similar. So let me show you why I think price is going to go lower. This is called narrative, which is what ICT talks about, which is what I'm trying to master. I'm trying to master narrative because it's more important than market structure, according to him.
Help me out real quick, because we started looking at ES1. It looks like.
Yeah, ES is the same. It's the same thing. It's the same thing as S&P 500. They just call it ES on futures. This is a futures contract because we're trading futures basically with. So right here, check this out. We have something called a volume imbalance. This is, like I said, I didn't want to load you up. This is the way I want to do it with somebody. I wanted to not, because some people would say, hey, you need to show him volume imbalances and order blocks and all that stuff first. But I'm like, I was like, well, why don't I just show somebody what to look for? And then while we're actually trading the method I'm showing them, then I'll talk about the actual structure. Okay, so this is a volume imbalance. So basically what this is this is ICT. You see this gap right here? You see this?
Yeah.
The market remembered this gap right here. Even though this gap happened back in June 9th, the market remembers that this gap is down here. This is why I see price going lower. You see, I already explained why I saw it going lower on US30, right? You saw me explain that for about 10 minutes.
Yeah.
I was explaining why I thought it was going lower on US30. Now I'm explaining why I see it going lower on S&P 500. It's because this gap is down here and it has not been filled in yet. You see that? This gap has not been filled in. The market is not going to just leave this open like this. It knows it's there. The market knew this gap. This is a volume imbalance, meaning that it's a gap, but it has wicks in between the gap. Because you have some gaps that don't have any wicks, and that's just a gap. But this is a volume imbalance. Okay, so this is a huge volume imbalance. This probably could be considered a gap if ICT was watching this.
So I haven't seen one of those before. Those gaps are not actually possible, right? There's just data missing, or there's data that we're not seeing at this time scale.
Here's another one.
Right?
Here's another volume imbalance. So that's what I'm saying.
But the wicks are still. The wicks still connect. Yeah, I see what you're saying.
Yeah, it's still. This is what ICT call a volume imbalance, and when you mark it up, you got to put it on the bodies. When you see this, you gotta train your eyes to see this stuff, because even though this gap was created, the market it goes in order of importance. See, this was created first, so the market it's not gonna fill in this gap until it comes down here. It has to fill in this gap first, and then it's gonna come back up here and fill this in. And you're gonna watch this video 2-3 weeks from now. You can be like, damn, he was right. It does it in the order of importance. Now, the way it works is, let me see how to explain this. The way it works is, this is how it works. When these gaps are filled in, it has to go down, up, and then down, and leave it, and then it becomes a balanced price range. This is how ICT teach it. So let me see how to explain this. So sometimes it'll just go down and up. So this is what I mean. Like when price comes down here, it's not just going to go down here and keep going down. It has to come back up and then leave this for it to become a balanced price range. So either they'll go down and up, or to go down, up, down, and then leave it, and then it becomes a balanced price range. The way it works is, once the price range is balanced, meaning that price went down in it, and then it went up, and then it has to leave it. If price tries to come back down, it can't go past 50%. If it goes past 50%, that means it wants to go lower. So you're not going to understand all that, but I'm going to continue to talk about that because it's so important. ICT
Is that not a pattern that ICT doesn't
no,
quote
no,
unquote
it's not
doesn't
a
approve of?
no, it's not a pattern. It's
Not a
just
pattern?
it's market structure. It's just the way the structure works. Like it's crazy. Like I mean, I literally just found this out from his teachings. It's called a BPR, balanced price range. So price goes down, it goes up, and then it goes down, and then it leaves. It has to leave that gap or that balanced price range. So price is going to be down here doing this thing. Oh, let me go back. So let's say price comes down here and it goes down. So it creates like a down candle, and then it creates nothing but up candles, and then it leaves it. But if we start to see price coming back down, the way it works is it can't go past 50%. If it goes past 50%, that's game time that it wants to go lower. So what's going to happen is if it breaches the 50% of this BPR, balanced price range, then it's going to retrace up and then go lower. That's just how it works. So this is a signal. This is some crazy ass shit that he came up with that actually works. I mean, it's called a balanced price range. I mean, this shit that helped me out so much because. So what I'm saying is this is what I see price coming all the way down here to fill this in. Now we still have this gap up here, but according to the structure, the way I understand the structure works, it has to fill this in first before it comes back up here. Okay, this is what I see happening. Now, if it comes back up here to fill this in and then come down here, then, I still got more learning to do, which I do have more learning to do. But what I understand about the structure is that this gap was created first. This gap was created first. And so the market remembered that. So it's going to come down here, fill that in, and then come back up here to get that one. Because overall, I see this as being bullish. So that's kind of what I see happening. This is a higher time frame teaching. So let me go back to US30, and then let me go back to that the weekly chart, and let me show you because I want to show you something on the. So that's what I'm saying. You got to start marking up all the charts. That's why I gave you ES. That's why I gave you S&P 500, US30, and you literally can just mark the charts up on that weekly chart that I gave you. Hold on. Let me go back to. Let me see how you share this tab. Oh, it says stop sharing. Oops. Hold on, quick. Okay, so what I want to show you right here is check this out. This is something that I've been thinking about. Check this out. We also have gaps. We have something called new day opening gap. So let me show you what that is. It's some ICT shit. This dude, I mean, this dude's just crazy, wicked with this stuff. So this is called a new daily opening gap. I'm about to go to it. It'll have to drag the screen up. It's freezing for some reason. Okay, so now listen. This is a new day opening gap that happened weeks ago. But you have to mark this stuff up and keep pulling it to the right. See this right here? This is a gap right here. I'm not able to zoom in. I don't know, for some reason
I can see it.
This screen right here, it won't allow me to just zoom in, but it did on the other screen for some reason. Maybe it's this broker velocity or something. But basically,
What's
this
the
is
date on it? That August 1st?
Yeah, you probably want to go back and mark this stuff up too. This was back in. This is back on August. Yeah, August 1st. This is a new day opening gap. This is why I call it end dog. It's what ICT called new day opening gap. Now, if you notice, this gap has not been filled in yet. So this matches up with S&P 500. Remember, I showed you that gap on S&P 500.
Yeah, sure.
Yeah, that's what I'm saying. This is the same gap right here, but this is US30. That's what I'm saying. They move similar, so we got a gap up here. Remember, the market remembers all this stuff. It has a mind. It's an algorithm controlling all this stuff. We don't believe in buying and selling pressure and all that kind of stuff. I truly believe it's an algorithm that's doing all this, and all we have to do is just ride the coattails of this thing and figure out where it's going. So look, what I'm trying to tell you is that price has to come back up here to fill this in at some point. You know, that's why I see the market being overall bullish, because it has to come back up here at some point. So we have to see, remember that. But like I said, hold on quick. Hold on quick. Yeah, maybe I need to stop sharing this. Hold on quick. All right. All right. So, like I said, we got an order block down here that price can come down here to. We got the mean threshold down here, and then we got a lower down close order block down here as well. So, I mean, I'm probably going ahead and take a short. I'll probably go ahead and take a short, but all right, quick. Yeah, so I see price going lower. I think it's going to break outside the range going lower. That's what I'm going to bet on. But don't be surprised. Now, remember this video, you have to go back and watch it when I post it. Remember, we see price breaking out right here. We see price breaking above. We saw it break out 4 times above the weekly opening price. That's why I have it blue. And right here, we see price actually just need to be green because I color coordinated. So basically, price broke out above the daily opening price 3 times right here. So this is a sign that price wants to come higher. So don't be surprised if it takes out this high, because sometimes it may come up here, fake people out, and then go a lot lower. But it may be some kind of bullish action, because it price seemed like price really trying to break out of this cage right here, even though it wants to go lower. So I'll probably go ahead and take a short, and I'll probably have a stop loss. Probably above mean threshold of this candle right here. This is an order block right here. Oh no, this is the 1 hour chart, but this is an order block. When you see a long candle like that, price sometimes wants to come back up to mean threshold, which is 50% of that huge candle right there. So this is the low of this bullish order, of this bearish order block right here. But sometimes when you see a thick candle like that, price may want to come up to 50%. So I'll probably put a stop loss probably right above the mean threshold at a QP. So this is 35,037. So I'll probably put it at, because remember price, the orders are around the 50s, the 80s, and the 20s. So this is a 50 right here. So price could come all the way up here in reverse. So I'll probably put a stop loss probably like right here. And I probably would go short. And I want to go short down to mean threshold. I might put like 4 orders on with low leverage. And it's probably going to come down here to mean threshold, or that's why you see this green box right here, because I see price coming down, hitting one of these levels and then reversing up. Not for the long term. It's because remember, when price breaks out of this Monday to Wednesday range, it usually peaks down. It usually peaks down. Hold on, quick. It usually peaks down on Thursday. Like I probably need to make this a lot lighter. So it usually peaks down on Thursday, and then it'll come back up into the range, and then it'll always take out Thursday's low. And it did this, and it'll probably come down here to the opening price, and then just kind of mellow out. It'll just mellow out until Friday. So, but you could guarantee that low, Thursday's low, will be taken out. So that's how it always happens. About 80% of the time happens like that. And so this is kind of
You're
what I
not
see
expecting
happening
it
right here.
you're not expecting it to shoot back up to the gap that's sort of at the top of the charts right now?
You said go back up to the new day opening gap?
Yeah, exactly. Aren't you expecting that to happen soon?
Well, hold on quick. Yeah, let me show you. So the
Because like now
reason,
I'm starting to wonder like which is
yeah,
a
that's,
more powerful
that's
influencer.
what I'm trying to say. Like the way it works is based off of my back test and everything. This gap is going to fill in it's going to do it in the order of importance. So which gap happened first? This one or the one at the top here?
Well, is the order of importance like the order of
It,
in
it's
which it
it
occurred?
normally I'm not saying this is true because I'm still experimenting with this myself, but based off my back testing, it
Sure.
always fills in the first. It always fills in the one that happened first. So this one happened first. So it went up and then it went to an order block, and that's what pushed it down. And then it created
Yeah.
a gap, right, a volume imbalance. And so I see price now, especially with these candles being so vicious like this, I see price coming down here to fill this one in first. Now, sometimes this how this works. Listen to this. This is important right here. Sometimes it won't fill in the gap. Sometimes it'll go to consequent encroachment. Consequent encroachment is 50% of the gap. Sometimes it'll go down to 50%, reverse up, and come up here and probably try to fill this in or go up to order block, and then it'll come back down and fill it in. So sometimes it's just not going to just come straight down here. A lot of times it will reverse off of consequent encroachment and leave a little bit open for a little bit, maybe for a few days or a week and a half, and then come back down here and fill it in. So what I said that to say is, if this was a target, then I would bet on it. I would sell my orders here, my sales here, or I would sell them at consequent encroachment because I've seen a lot of times where it literally reversed off consequent encroachment exactly. And so yeah, I mean, I probably stay short because we're inside of this blue box right now, and like I said, inside of the blue box, price usually reverses, and I could show that to you on ES. I have some of this marked up on ES right here. Let me see.
Wait, what's the blue box again?
The blue box is day 12, 13, and 14. See right here? Let
Mm.
me see. Let me zoom in. So what I'm saying is this is just based on patterns. I actually like patterns, even though I don't, like I said, I respect ICT and I'm a diehard student, but I still do stuff that I on my own, even though what I do with him is 98%. But I'm not like a robot. So just because he say patterns don't work, I mean, I see this myself. This shit definitely works. Okay, so this is day 12, 13, and 14. So you see price was just going up, going up, going up, right? And then on
Yeah.
day 12, it reversed. Now, I may reverse temporarily, but the whole point is when it hits this box, we know that if it's going down, it's probably going to reverse when it hits this box and go in one direction for the rest of the month, or it may consolidate like it did here. Also, if we come here and we take a look at this one here, let's see. I don't have a blue box on here. Hold on quick. Let's see. Day 5, 6, 7, 8, 9, 10, 11, 12. This is day 12, 13, and 14 here. So what I'm trying to tell you is that this is a pattern. This is for people who don't understand the structure that much. You can literally use patterns and then learn the structure because the structure is going to take a long time to learn. But these patterns is something that you can depend on. As long as you have a stop loss, you definitely need a stop loss if you don't understand the structure yet. I like to use both. So this is day 13. This is on the daily chart. Day 13, 14, and 15, you could put a blue box on there, and that'll just let you know that prices are going to reverse for the rest of the month or temporarily. Because right here, it reversed for about 5 days or so, and then it reversed back. So, I'm just now marking up ES or US30, but I'm sorry, SP 500. But yeah, man. So this right here, like I was showing you before, you're gonna have to mark up S&P 500 because it's the leader. Like this was leading US30 the whole time, like I showed in that video.
Mm.
This one hit the green box first, and then US30 hit it 2 days later. This one hit the 50% of the one standard deviation first, and then US30 hit it a day later. See what I'm saying? So this basically sometimes this one can tell you what the other one is going to do, you know. And so yeah, I probably just stay short, like I was saying. And let me go back to the 1 hour chart. I probably stay short and just have a stop loss at where I showed you. And so yeah, I see price going lower. But if it has some kind of bullish reaction, I won't be surprised because I see price trying to break out, especially right here. It closed above 3 different times above the daily opening price. And it's below the weekly and it's below the monthly. It shouldn't be doing that. The pressure should be pushing it down. And it had this strong push right here. So that's something that I have to be aware of. But I understand that it do want to go higher at some point because we do have that gap up there. So, but this may be one of those days where it just stay inside the range and then break out on Friday. Shit. I mean, you never know. I
Yeah,
don't. I
I'm
don't know.
surprised you're saying that. Surprised you're saying that the pressure is pushing it down. So you're saying that the weekly and the monthly, what are those lines? Those the
Right. The opening price
opening price.
gives you sentiment. Yeah. This is ICT's teachings. Like
So it's below both of those, but it's going so like you'd expect it to continue below the daily opening price, but it's trying to stay above, which tells you
exactly.
it's gonna
So
probably sink
like
soon again, huh?
like look, this is kind of what I came up with. Like usually if it closes, if it's below the monthly opening price right here, like it is, and it's below the weekly opening price and price opened up right here, price should have just stayed down. But when it closed above the weekly opening price and it closed above the daily opening price, I marked that up as a blue and I put +2. So usually within 2 days, it'll reverse. See, like I didn't see this shit happen over and over again. It's kind of crazy. So that's why I put +2. So 1, 2, and then usually this day here around 8 to 12, 8 to noon, it'll reverse in the opposite direction. I don't mean it's going to do it for the long term. It may just do it temporarily and then go lower. But like I said, you can reference this video back and see how accurate I was with the predictions. But I mean, you'll see this on my charts as well. If I go to the left, you'll see a blue line or you'll see a yellow line because I put +2. It's like within 1 or 2 days, price will reverse. So this could be a day where it comes down here and it peeks its head out and then it reverses and tries to go back up and it'd be like one of those Fridays where prices break out. So I'm not sure, but I do know we have confluence down here. We got a mean threshold and we got a bullish order block that's even lower than this one because price is always going to respect the lowest down close candle. Like this is an order block zone right here, but this one right here is even lower. So it's more powerful than this one. So this is the opening price right here on that weekly order block. And here's the middle of the candle. So I got to see like how, if price want to penetrate, if it penetrates this and closes below, then that's telling us it wants to go lower. And I explained and showed why I think it wants to go lower because on ES, it has a gap down there that hasn't been filled in yet. And I remember when that gap was created, I thought price was going to fill it in. I went short and took a loss. And I was like, okay, well, maybe it's going to fill it in like a month or two. And this is where we are now. I think it's trying to fill it in. So
I see.
Yeah, so like for instance, I'll show you again right here. Hold on, quick. It won't give me the measuring glass with this one for some reason. Okay, like for
The video?
yeah, it's I don't know for some reason it's just not showing the where I could just zoom in with the. Every time I try to record, it does that. Maybe it's with the recording software I got, but let me show you again right here. Oh god. Oh, hold on. Also, we have a QP down here. We have a major QP. We got a 34,500 as well. So this is a confluence as well. So we have a mean threshold. We got an order block zone, and we got a QP down here. Because remember, price is going to where the orders are, and most of the orders are at these QPs. This is the 750 right here. This is how I had you mark your chart up as well. Hold on, this right here needs to be moved. This is the 750. Yeah, I accidentally moved it. A lot of times people don't even use order blocks and all that. They just use QPs and they just get out when price They project based off the QPs. A lot of people who don't even follow ICT. So, okay, so let me show you this other blue arrow real quick, just to show you the whole +2 thing is real. That don't mean it's gonna happen all the time, but it's like we need in your mind, you're gonna have like 3, 4, 5, 6 different confluences that is going higher or lower, and then it's gonna help you like place the order for buy or sell. Oh man, what's going on with this thing? All right, so look right here. Okay, so
I laugh because you've got so many. I bet you've got so much. You have so many markings on your
yeah.
chart
It's
that
it's a
to
lot
keep up.
of it's a lot of markings. Some stuff I'm experimenting with, and especially that purple box right there. That I thought it was a game changer, but I'm still trying to figure out what it actually does. But so right here we had price close below. Remember, it's below the monthly opening price, and
Okay,
it's above
which
the
is the
weekly
pink
open.
line.
Yeah, and it's above the weekly opening price, so it shouldn't have did this. Price closed below the weekly opening. Look what's going on. It closed below the weekly opening price, then it did it again. So this is game time, letting you know that price is about to go lower the next week. So when it did it the second time, I put a +2 on it. So this is basically letting me know, like within 2 days, I need to go short at New York Open. So if you look right here, so I counted. I said, okay, so 1, 2. Now this day here, because we don't count Sunday. This is Sunday right here. This is a non-event.
Hmm.
So the next day, I need to go short in anytime between 8 to noon, 8 a.m. to noon. And so I could have went, if I saw this big engulfing candle, I could have went short right here. It could have retraced on me a little bit, but my stop loss would have been above the high, and I would have been in this
Hmm.
trade right here to go lower. So this whole +2 thing, I've been experimenting with it, and it seemed like that's it all. Not always, but it's like a clue. It's like a clue that it does this, and and of course I have the days counted up as well with the green arrow, with the green number ones and all that, and the red number ones, meaning that price closed below the. Hold on, quick. I just want to show you one more real quick. Okay, here's another one.
Yeah, sure.
Yeah, so like I said, I came up with this on my own, just just kind of really looking at this stuff. So here's another one right here. Was that the little warning?
Yeah, yeah. But
What does it say?
it's got
15
15
minutes?
minutes. 15 minutes, but I've got 10 left, so we're good.
Okay, cool. So this is another one right here.
Okay, when is this? August 1st? Really? Okay.
Yeah, so let me show you. So
Dang,
price is
all right.
above, price closed above the weekly opening price, which is this green line right here. And and then price closed above, this is the daily opening price. Price went below it, and then it closed above it strongly right here. So it closed above the weekly opening price. So I put a arrow +2. So like, okay, this may not work, but if it does, within 2 days, price should be trying to reverse. So within 2 days, so that don't mean that it's going to reverse like for the rest of the week. It may just reverse. It's basically you could just be a buyer to a certain area of liquidity. So right here, it was the opening price. So I didn't know if it would go to the opening price exactly. So I got out here at the consequent encroachment of a wick. This is consequent encroachment of a 4-hour wick. So this is the middle. It was a long wick on a 4-hour chart, and I just got out there, but price went. Sometimes it wants to retest the opening price of the week before it goes lower, which is what it did right here. So it's not a panacea, like it's not going to work all the time, but it's just like a clue when price closes above the weekly opening price and the daily opening price. Because here's the weekly opening price, here's the daily opening price, and here's where it closed at. So I put a blue +2, meaning that within 2 days it's probably going to reverse, or I could just be a buyer sometime between 8 a.m. and noon. And right here, I could have been a buyer. I was a buyer at 8 a.m. I think I got in at like 8:20. And I
Wait,
got it. and I got out
Okay.
that
Oh
consequent
yeah.
encroachment, even though it went up here to. This is a QP too. See, this is crazy. See, I should have held because this was a confluence. See, right here, it was a
Mm.
QP and it was a weekly opening price. This was a 35,500 QP and it was a weekly opening price. So I should have known better. I mean, because that was a confluence right there. But this was consequent encroachment of a wick, which is 50%, which price usually reverses off of. And you can see right here, you see this long wick and then price reversed and came down here. So I got out here at consequent encroachment of a wick, even though it went higher. But I should have saw that. But you have to look for the multiple confluence. This is the weekly opening price, and it was a QP. And some people trade without order blocks and all that. They just get out at the QPs if they don't know if you don't know where to get out at. The QP could be a area where you can get out at. A lot of people trade like that, you know. So that's kind of what I see happening, man. I would just go short and then put that stop loss. You could put your stop loss above the a little bit above the middle of that order block on a 1 hour chart. That bearish order block, the huge white candle.
What are you talking about? You talking about today? Like you talking about like?
Yeah, I would just go short. Yeah, I'm going
Trade there,
short.
trade there.
Yeah, I'll probably go short in the next hour or so, and because prices could definitely continue to keep dropping. Like I said, I just got to learn how to trust my own analysis. Like I know it's gonna keep dropping, but when you put real money behind this shit, man, it's totally different than demo. Because people are like, yeah, I've been winning on demo for a month, I'm good. But when they put $1,000 in that account or $10,000, it's a whole nother ball game. Because it's like, okay, well, hold on right quick. I actually could lose this fucking money. I mean, it's not the same. Like demo is cool, like you can get your confidence or whatever, but and you should be on demo for a long time, but when you put real money up, it's like a whole nother. It's just totally different. Even though you've been winning on demo, it's kind of weird. It's a psychology game. But so worst case scenario, you could just put your stop loss at the high up here, and then your target, like when you put your coordinates in MT5, you could put your coordinates for the mean threshold right here, which is 34,617, or you could do 620, because remember, that's a QP. That's where price is not going to where the order blocks are really, or definitely not where these patterns are. It's going to where the orders are. The orders are at the 20s, the 50s, and the 80s. And the major QPs are, of course, the 250s, the 500s, and the 750s. So this is mean threshold. So, I mean, this probably be like the first target right here. But price just hit a QP right there. So it may try to reverse and go back up to this order block first, because it just hit a QP just now. But so I mean to cut you off, but I probably should wait to see for price to come back up here to this order block, and then because it's probably gonna come back up here and then go lower. So that's something I got to think about.
Yeah, I feel that because because it's gonna take it's gonna take me. I'm gonna need time and maybe some help to just learn, because I don't know yet how to place how to make a trade, and that's going to take some learning time on my part. I don't think that I think we got to play this like we usually do.
Okay, well,
Let's go off of that
this
prediction. Let's see how it
okay.
works out.
This what you do then. This what you do then on your chart itself. Just put like a red line right here on your chart
Yeah.
itself. You could just ghost trade it then. So on your chart, just put a maybe you could put like a red line right here, and then you can put like a yellow line, maybe close toward. This is like your alert, and then your actual stop loss. So you could just ghost trade it. So you could put like a, and then
Exactly.
you could just draw an arrow down like, okay, well, position one, I'll get out at this mean threshold, which is 34,620, and then your second position, you'll get out at this order block right here, either at the high or the mean threshold. I'm sorry, consequent encroachment right here. So you could ghost trade it like that and just put like a red line, meaning your stop loss right here, or you could use that long and short thing. The option on the you can use the long and short thing right here. Here's the short position thing right here. So you can draw this on here and just put exactly where you think you would get in at. Either you're gonna wait for it to come back up to the order block, or you can be like, I'm just gonna get in, hop in right now, and I'll just put my stop loss, where he said put it at. So you could just say, okay, well, I'll just get out at I'll just put two positions in, and you could just ghost trade it like this. and just put your stop loss where you would put it at if you actually was on demo until we,
That's
you
sick,
know, help
man.
you out with
Yeah.
that. You could just like do, and then you could clone it and then put another position on and say, okay, well, and then just leave it alone. Don't even move it. And then you could kind of see how you did. You could be like, okay, well, and then I'm gonna go ahead and, or if you want to get in right now, you like, all right, well, I'll
No,
get in.
yeah, I'm afraid don't have the time. Got
Yeah,
a busy evening.
yeah,
A lot of
yeah,
things going on.
yeah.
Give me 3 minutes.
I'm just saying when you have time, like you can ghost trade it like this until we show you how to do the
Yeah,
demo.
exactly,
So
exactly. So
yeah,
like, I think I'm gonna go with that
yeah,
off of the video. Um, yeah, but that's awesome. But here's the thing. Here's the thing. I'm happy we did this because it's like this is finally the lesson where where I'm seeing that that you're working with like multiple different influences, multiple different like
confluence.
patterns
Yeah,
to try and find a confluence that you can put your money in on. And I'm like, now I'm finally seeing like this is like it's an animal that behaves in predictable ways. You just got to know what the
yeah,
starting points are and what you think what are the patterns to where it's going to balance it. It's wild.
exactly. Yeah, man.
And,
I'm telling you, when you see those numbers move on demo, you're gonna see the power of this stuff. Like I'm saying, like especially with US30, you know, you put like a zero point 0.1 or a like a 0.10, and you see how much money you come into your account, and then you be like, man, like if I really had like real money in there, you start to really see like how this really can help, you know. And that's why I take it so
yeah.
seriously, because if you miss the moves, it's like I'm missing out on. That's why I wasn't going out and just staying in a room all day trying to figure it out, because I'm like, what am I doing out partying when I could have had more money in my account this week if I would have known, if I would have caught that move. I didn't catch that move because I wasn't confident. I wasn't confident because I didn't know. So I need to go back and study more. Like that's just what I was on for 2 years. Like I just didn't care. And now,
I'll tell you this. I'll tell you this, dude. Like that's because like we started this conversation, and I told you like I wanna learn about this because I don't know where it's gonna go. I don't know if it's actually a thing I can make money off of. I just want to learn like what is this discipline, and what's the obsession in it? Like why do people like really dive deep into it for years? And I'm starting to see it thanks to you, man. I'm starting to
yeah,
see
yeah,
what is so alive about this and what is so like what like reels you in so hard.
yeah, yeah.
With that, man, I gotta go, but let's get back to our Tuesday session, and we'll talk about what happened here.
Okay, cool. Yeah, I'll stop the recording and then I'll post this and send you the link.